Hello everyone. Now we are back on our third panel discussion for the day, harnessing new technologies to disrupt digital lending landscape. For which I would like to invite the moderator for the panel discussion, Mr. Abhishek Gandhi, co-founder FatecPay, and
Hello.
also would like to invite the co-panelist, Mr. Rohit Gar, co-founder and chief executive officer for SmartCoin, Mr. Karan Mehta, chief technology officer and co-founder for Kish, and Mr. Japan Doshi, head of product engineering and data science, Rupeek, and last Mr. Shashank Sharma, director for ScoreMe Solutions. So now, handing over to you, Mr. Abhishek Gandhi.
Hello, and good afternoon, everyone. It's a pleasure to be in such esteemed panel. The topic of today's discussion is harnessing new technologies to disrupt digital lending landscape. So everybody knows India has a unique fintech lending ecosystem, and due to the nature of its market and regulatory approach, the evolution of India as a fintech lending structure, even though similar to a lot of other countries and comparable, but it's not necessarily the same. So there is an underlying uniqueness, and there's a lot of progress, different kind of customer segments, TGs, etc., which are either underserved, unserved, underbanked, and so on and so forth. And these could be MSMEs, it could be retail, borrowers or retail folks. And there are a lot of innovative offerings that are coming around to cater to this segment, and in terms of majorly in terms of digital lending. So the question is, will new age fintechs be able to ensure transformation with their digital lending offers amidst this existing challenges? So again, I have a very knowledgeable and experienced panel with me, and the first question that I want to throw is, how significant is it to developing a unique fintech lending ecosystem in a diverse country like India? And I would like to start with hello.
Abhishek, I think we lost you for the last 30 seconds.
Okay, so I was
We
saying,
heard the
for the
question, but
first question. So I would want to, invite Rohit to start and open the panel. How significant is it to developing a unique fintech lending ecosystem in a diverse country like India?
Right, Abhishek. So I think absolutely. I mean, if you look at India, right? I mean, India becomes a very different landscape, both in terms of challenges and opportunity when you compare to the Western markets or even a lot of emerging economies as well, right? The first and the foremost thing is India is, I mean, not a country, but more like a continent. wh- uh, when you actually break down in terms of the demographical behavior and sort of the new age technology and digital behavior. Um, so, like if you, for instance, when you're talking of lending business, right, a lot of it resides on how well are you able to underwrite a person. Uh, and as we have seen in India, say if you are catering to a customer in South India, his behavior will be very different from say someone in Central India or East India, and even within a single state or a single city, the way you will serve or look at data for a person who is say running a small shop versus a guy who is actually working in gig economy or working a white collar job, that also changes materially. So when you're,
Absolutely.
I think, building your systems and building your algorithms, for instance, you will have to take care of what data is relevant for what customer. How do you think about it? How do you get it? How do you process it?
So
And
very
and then
quickly, in
yeah.
in terms of smart coin, is there any specific things that you've implemented, to address these kind of issues?
Yeah, absolutely. So, I mean, as I was saying, like essentially, and then this problem is across the entire spectrum, right? Right from how do you onboard customers, what sort of interfaces should be there. Like again, for smaller city population, I think the onboarding flow should have to be much more vernacular, much more intuitive versus say a relatively, I think affluent customer. And then obviously, I mean, how do you set up the entire product flow? What sort of products do you offer? Everything will customize accordingly. For us, particularly if I talk about in our context, so one of the key things that we did, right? So SmartCoin focuses on enabling access to credit and eventually all financial products for the emerging India segment, which comprises people across gig economy, self-employed, and then new age aspirational segments. So what we realized that taking a very blanket rule engine based approach, right? Ki, theek hai, a customer who is say, earning above this level or is showing this behavior, that's not an approach that you can scale across the country. So you have to use AI and machine learning to its very core, keep technology at the center if you want to create something which works pan India. So from the
Correct.
beginning, we have made sure that we created systems and technologies in such a way that we are able to accurately identify these different user personas, which actually range from anywhere from a few hundreds to a few thousands, depending on where you are going, and then you basically map everything for that. So 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 so, so that becomes one of the bases that you have to take care of.
So moving to Shashank, is there a separate kind of scoring algorithm, or how do you differentiate between different target segments? Can you throw light on that?
Yeah. So Abhishek, I think that's very, very important to understand, the kind of diversification which we are sitting at, in terms of the customer base in the country. And having said that, not just a diversification in the customer base, I would say the differentiation in terms of the product offerings which are there, from the initial stakeholders in the place. You talk about banks, you talk about NBFCs, you talk about new age fintechs. So we have, a plethora of different types of products being offered. So while we were, evaluating different modules to, I would say, underwrite customers for different institutions, we have definitely considered, this factor in place that how a different evaluator, like somebody who is serving the unserved economy as of now, or new to credit customer, how do we evaluate that? So we have, placed certain algorithms in place where we look at alternate data points to score the customer. We look at his behavioral patterns and how exactly is he transacting with other modes. So I would say that understanding the financial appraisal is not just the only parameter, but yes, there are certain indirect, I would say, transactions which a customer, everybody in the country is doing, basis which we can at least get to know a basic know-how of a customer and try to revise further. Now, moving forward, on top of that, when we go to a higher range of customers where we have a structured data in place, even the structured data is, I would say, a lot unstructured when it comes to designing different algorithms on top of it. So again, a considerable effort has been done on that part as well. That how do we collate data for different kinds of retail versus a business portfolio? How do we present it to the banks and NBFCs in a way it can be screened through a kind of an STP process. So that's where we have, I would say, focused ourselves, and we have very, I would say, focusedly been working on devising solutions which can give you outcomes in minutes. So gone are the days when we talk about economy where lending is a multi-fold effort which runs in multiple days. So we're trying to squeeze it down to kind of a minutes for any kind of a lender which is there.
Oh, sounds great. Super, Shashank. Again, I would like also to hear from Japan, and he's quite close on the product side. So, for a diverse country like India, how do you differentiate between different segments, and is there a specialized way of looking at them? Japan?
Sure. Yeah. I think, India is like folks said, right? India is a large country, billion population, various segments. And one of the segment that is well served, I feel today is 30 to 40 million customers who have great credit score of a CIBIL score of 750 plus, and their needs are largely met because they have a lot of products like credit card and whatnot. But when you start looking at next 100, 200, 300 million customers, you start getting into people. A lot of them largely have land, kirana stores. They're like small businesses, individual households, and they don't have a lot of digital footprint. Right? So say many of them may not even have a bank account or active bank account. I would say, right? They may not have a cash flow flowing into the bank so that you have data to figure out what the credit worthiness of the customers are. And one of the things that we have debated a lot is, what's the best way to serve this segment? So one way to serve this is by building a lot of data about the consumer behavior, and we built that. I think when I was at Amazon, we built a lot of consumer shopping behavior data to understand what's the appetite for customers to pay. That's one way to solve it, and there are a lot of companies who are trying to now focus on building a lot of data so that you can kind of give lines to customers. The segment that we are also looking at is the one where we absolutely don't have data and consumer behavior is completely missing. And the segment that we are after is, people who have a lot of assets. So if you look at 95% of Indians' net worth, it sits in some form of assets, whether it's real estate, whether it's gold, whether it's vehicles and whatnot. And what we are really trying to figure out is how do we monetize these assets. So if we, India, gold, if I just take gold as an example, India has a 1 trillion worth of gold. And it's literally sitting and doing nothing besides people wearing it for the festivals and whatnot. Imagine if you were to even put a portion of that, percentage of that back into credit ecosystem, it can be a huge boost to the GDP. So what we are doing at Rupeek is we're trying to build different financial products which are backed by gold, and in future we'll have other assets as a collateral and enable sort of credit access for masses. One of the things that we are dealing with is the emotional connect people have with their property and the assets, right? So it's not easy to convince people to deposit gold with us and get credit lines. So we are really trying to figure that out. How do we remove that kind of barrier and the stigma?
So super thought there, Japan. Unlocking the assets, the potential of assets which are sitting with a lot of population. Having said that, there's a huge segment of credit invisibles which are also kind of asset light. As Japan and many others rightly put it, don't have digital footprints. And how do you then solve for them, or how do you score them? How do you make products to for this segment? And I believe Kish is doing a great job at it. So Karan, over to you. How do you what are your strategies to serve this large credit invisible segment?
Right. So Abhishek, for us at least, the primary focus from inception has been that we've actually been going out after exactly that market, the NTC market, the ones that don't have a strong credit history, at least in the formal sense.
Correct.
Over the last 2, 3 years, or at least our thinking has evolved that almost every user that we are talking about, we are only targeting people who have smartphones, and people who do have smartphones do have a rich digital footprint, whether they realize it or not, just in the form of banking transactions. Most of these customers who have a smartphone, a large portion of them are now using UPI in the form of Google Pay or Phone Pay. They are doing some banking transactions. For case our target segment is only the customers who do make have a regular income per month, whether it's salaried or self-employed, and these customers do tend to have a lot of rich data in the transaction and the banking transactions as well as other purchase transactions. It may be thin, it may be light, and even some other heuristical data like what are the apps that are there on their phone, what are the geolocations. This does feed into a rich digital footprint. And the technique we use basically at KIST is what we call data multiplication. You just go and tap a lot of different data sources. You go and tap the credit bureaus, you go and tap electricity boards, driver license databases. All of these are government provided services. You try to collate all of the data. You have 15 different data sources per customer. You'll get hits at 3 or 4 data sources. But effectively using all of this data in a smart manner with the right machine learning algorithm. And we are able to train our machine learning algorithm on the back of some 9 million loans that we do every year. And that does lead to a very rich data model that's able to differentiate. And we've seen that you can use that to go after a very large market, which is otherwise invisible, otherwise not going to get access to credit seamlessly. And you aspire to do all of this in as little as 5 seconds, right? These are customers who are looking for smaller ticket size loans. They're looking for loans around 30,000 rupees. You can't have a process for them that says, we'll take your data, we'll take a couple of days and then come back to you. A lot of times their needs
Correct.
are immediate. They want to take the credit because they have, they have to pay their supplier, or they need that credit so that they can, continue to run their business. So you are able to at least do that. I believe the customers that don't have any digital footprint, unfortunately, it will be difficult for the fintech players to support them without some physical processes in place. And as soon as you start talking about physical processes, going to the customer, you are talking about larger ticket sizes or more complex products. At least for the personal loans you are doing or the consumer durable loans we are doing, that is not going to be feasible. That is one of the biggest reasons banks and traditional NBFCs have stayed away from this market. But the good part is the digital innovation in India over the last 4 or 5 years has actually caught a large segment of the population over into this digital data footprint rich environment. And I think that is one of the reasons why you're seeing so many of these digital lending companies thrive. Whoever can make sense of this data is able to do very effective lending.
Very rightly put, Karan. So, a lot of multiple data sources, especially for these credit invisibles or really thin file customers. So, just want to understand from Shashank, how some of the data sources were mentioned by Karan. Is there any other data sources that you would want to add to basically underwrite or score these customers?
No, I agree with Karan that he rightly mentioned on the kind of data sources which they are using. That's more or less I would say easily available with each and every customer set. At least So, for example, talk about utility bill payments. We can track the pattern of the payments. It kind of gives an operational understanding of the customer whether everything's on track or not. And that payment can be tracked. Be it he's paying it in cash or he's paying it through any UPI. So need not that we need a bank account statement to analyze that. Again, that the level of KYCs which a customer maintain, the kind of PAN cards and Aadhaar card which we by default have in the country, these are very good data sources to look at. Apart from that, yes, if there is any kind of a financial data source which is available in the country, we are able to extract that. So, for example, for a very small sector of I would say salaried individuals, your provident fund data, that even solves a purpose at a very good notch. That is there when you go a little higher in the ticket size of the lending. But on the lower ticket size of the lending, I think these KYC sources are doing pretty phenomenally good for helping understand that what type of a behavior the customer carries there.
Super. So, in terms of data sources, and want to ask Japan here. So, will the data sources be different if you're looking at a retail, credit invisible vis-a-vis an MSME credit invisible?
Yes, I think, I mean, there can be overlap and there can be differences. So, for example, when you look at MSMEs, you can start looking at things like GST invoice data,
Correct.
right?
Correct.
When you're looking at MSMEs, you can sort of start looking at some other cash flow, the invoices that they process, whatnot, and you can, and most of the MSMEs generally would have some digital presence in terms of, because tax payments and whatnot, right? So you can look at that data. But when it comes to non-MSMEs, right, like people like us who are just individual consumers, you can then look at, their shopping behavior, their utility payments, one of the things that actually I'm pretty excited about, which is very difficult to get, is data points that around customers' home. So what we do, we go to customers' home to, let's say, collect, do the appraisal of the physical asset. And when you do that, actually, what we're able to see is, ask customers questions like whether are you owning a house or are you renting a house, or what you can see sort of what appliances he has, and obviously all of that is with customer consent. But imagine the kind of 360 view that you can build, is pretty phenomenal. The other idea that is there, I know some companies are looking at it. We have not looked at it, but you can also start building social graph. You can start figuring out like who are you connected to, and based on that you can derive certain insights, and
Correct.
try to figure out what's your lifestyle and what's your ability to pay. So there's a
No,
lot
super
of
thought.
data.
No, again, super inputs there. Getting to understand how they live and what kind of appliances and things they have in their house. Rohit, what's your secret sauce at SmartCoin?
Right. So, see, I think, I mean, you need to look at it in terms of layers, right? So I think the most basic layer is obviously the data layer, right? In terms of data sources, which we've been talking about. I think eventually, I think most of the companies, unless you have a distribution first strategy, are accessing the same data, right? And anyway, with the consent layered, architecture that we are moving towards with account aggregator also, already live and growing now. I think eventually we'll have a democratization of data sources. I feel, right. So I think the sources in itself won't create an advantage itself, unless, as I said, you have some other layer and you have some distribution related data that you're getting. The most interesting stuff will happen, obviously, in terms of how do you consume this data, how do you process it, because that's where I think most of the systems are still in very early stages. Like today, you can get access to tons of data. We talked about SMS, we talked about, I think location, we talked about social graphs and all of that. The
So
problem
I
is, I
think
think once you start processing it, like how do you create the features, how do you create the systems to actually accurately understand them? How do you, I think, create the right models, test out all those things. So
So
I think,
Rohit, let me extend this question. What are the cutting edge technologies? Such as I heard somebody saying machine learning, big data, artificial intelligence, and you rightly, rightly mentioned there's going to be a democratization of the data, and ultimately it's going to be the smartphone or the multiple data sources, which is probably more or less available to all of them. So I think technology and the way you utilize that data, as you rightly put, is going to be a key differentiator. So give me your thoughts on how you're planning to use technology and what sort of methodology are you planning to use in this segment?
right. So, I mean, like you talked about, right, AI and machine learning. So that's going to be pretty fundamental. I think over time, anyway, we are getting there with a lot of tech first companies, and I think very soon it will become a necessity, and I think not a feature, right? So how do you use that to basically absorb all these tons of data? How do you use it to, I think, create I think the most relevant features for your target segment, and I think build the models on top of it. That will be very, very important. In fact, like someone talked about, social graphs. So that's something we have seen again works out very interestingly, especially for your fraud related engines, right? I mean, when you're looking at underwriting, you are looking at fraud, intent, capacity, and multiple other engines, right? And fraud is something which actually escalates very, very fast. I mean, if you leave some loopholes in the system, and if you have a 100% digital strategy, then as soon as people realize that, and in India, I think while majority of the guys are good, but even that 1%, sort of fraud loopholes, they can wipe out your company, and we have seen those stories playing out in I think the certain companies in Africa and South Asia as well, right? So
Correct.
so so that becomes very important on how do you make sure you are step ahead and using this data and using AI and machine learning. Second thing, which again could be interesting, will be with respect to the vision, computer vision based technologies, right? So some of the data that, like one thing which we feel could be really, really instrument. I mean, it's a wild idea. We haven't done it yet. But for instance, when you talk about shopkeeper, right? I mean, at least with the salaried guys, there's a lot of formalization of data which anyway happens, right? At least for a major chunk of the guys, you can check what company they are with, and is that company genuine or not, and things like that, right? With self-employed, it's largely completely informal and unorganized, so it becomes very, very difficult. But like one of the wild things that we keep discussing is tomorrow, say if someone just sends you his photograph of his shop, right? You can obviously geotag it and all, but then can you use it to, for instance, use the proximity data to understand whether it is genuine or not? Can you use that photograph to maybe at least some idea on sort of turnovers and the status and all of that, to do some basic level of underwriting, because there's still a large chunk of self-employed which does not even file taxes like GST and all, right? Because most of
Correct.
their turnovers are like 5 lakh, 4 lakh, 10 lakh, which typically does not come in reams of traditional tax departments. So I think whatever can you use there could be really influential. But yeah, I think we are getting there in terms of technology being available. The key thing is how do you now map it to the use cases and train your models.
So, interesting thought there with the geotag photographs. So, Karan, how do you differentiate between the good and the bad? Having access to multiple data sources and having all the data feeds. How do you actually then differentiate and say that I want to give a loan to this person and not the other person?
That's a very, very interesting question you brought up, Abhishek. By the way, when we go through a lot of diligences and audits, this is what a lot of our auditors ask. What are your parameters to give loans?
Correct.
And honest to goodness, the answer I have to tell them is I don't know. I really don't know what are the parameters. It's actually a machine learning model, which is I think currently taking about 180 different parameters, and it's a model, right? It's a fitted curve, Where if someone tells me what is your CIBIL cutoff, I say I don't know. We've given loans to CIBIL as low as 520. Do you look at income? We don't look at income. But let me just give you a top flavor of what is all the kind of data we look at. And there's a fitted curve where if someone were to put it into a polynomial equation, it's not possible because that's not how the model works. But we look at a lot of interesting data. We look at the raw data itself. How many loans has the customer taken? If he has a credit report, how late has he been on loans? What is the frequency of being late? What was the last time he was late on his loan? Something as basic as that. A set of parameters to our inputs are what are the kind of apps he has on his phone. Just to make a very, very, simplistic example, a customer who has a Make My Trip app on his phone is much less likely to default. I mean, just one independent data point, keeping everything else constant, right? And if someone asks me why is that, I'll say I don't know, but that's a trend we've seen, and it's a trend we continue to believe by just because the numbers prove them.
Very interesting.
Something as simple as, without taking the name of certain banks, there are certain of the new age small, payments banks. You know that as soon as a customer has an account with this small payment bank, the possibility of fraud is much higher just because their processes are very digital, and fraudulent customers end up targeting those banks to create their bank accounts to take loans into those bank accounts. So our data has proven that okay, if a customer has this as his only bank, stay away from that customer. Their transaction history, and you'd be surprised. Bank balances, in our experience, are not good indicators of ability to pay. What
Hmm.
is a good indicator is the transaction volumes. You see a customer with a lot of transaction volumes, he's generally going to find some way to make his repayments. Whereas a customer with, slightly decent bank balances but very, very few transactions, he might have an inertia to make payments, or we've seen that. But the long and short of it is, we used to have a rule-based engine at the very, very beginning of the journey, because that's what we started with. That MVP was a rule-based engine. That time I could tell you that okay, six CIBIL has to be about 650. We should see three bank statements with income credits, blah blah blah. But
Hmm.
we've been on this machine learning model for the last 4 years, and I can't tell you what works, what doesn't work. I can tell you that if you give me all of these parameters, I'll throw it to my model and it'll say yes or no. And the way we do it, Abhishek, is our model returns a score, and we bracket these customers into 20 buckets. We call them deciles actually. But depending on what is our risk taking capacity for this month and what is the amount of money we want to disburse, we have internal business targets. Okay, these are the disbursal numbers we want to meet, and this is our risk taking ability. We are able to tweak how many brackets you want to open up. The beauty of machine learning, the model that we've built is, before disbursing my first rupee this month, I'll be able to predict where my NPA is going to settle for this cohort at a 90-day period. And that's the power that machine learning has brought. And I know that there are a lot of valid points around customers across India behaving differently. The way we've seen it is actually it doesn't vary for us geographically or any other thing. We are purely on the basis of data. And before doing the first rupee of disbursal for the month, we can almost to the first decimal place guarantee this is going to be our 90 DPD number when this cohort eventually settles. And that this power, that being able to be very, very much in control of how your book is going to perform, allows you to make a lot of tweaks on what is the risk you want to take, what is the business you want to pursue for a given month.
No, super interesting, Karan. I think I have a question from the audience from Mr. Shashank. India's digital lending software market is expected to see a CAGR of 36% by 23. What is your plans of tapping this growth, Shashank?
Yeah, I think that's a very valid point which they've made. We have certainly seen, digital lending growing very rapidly, and one indicator of that I can give you is that although full respect to the public sector banks, but nowadays every public sector bank is coming up with their thought processes on building digital lending platforms, digital lending ecosystem, because they also understand when we talk about frameworks like account aggregation becoming more matured in the country, this is bound to happen. And we have, I would say, already factored in a lot of the new age policies which might come up in the future as well, especially with respect to MSMEs in the country, because that's a big credit gap if you look at as a number as a whole, runs in multiple hundreds of billions, over there. So we have very strong plans in taking the entire product shape of our entire service offering to a platform-based approach. And this platform-based approach would, then definitely assure that we are able to build a low-code platform, which, very easily configurable for anybody if they want to tap onto the digital lending side. And then we can build several layers on top of this, depending on the specific use case which that the specific lender might be having. So in totality, we are bringing an aggregation of all the fintech analysis which can be done for different types of documents, considering the alternate data sources or the standard data sources like a bank statement, a GST, a financial statement, running OCR activities on all these documents, doing immediate KYC validations, and alongside looking at the legal history of the customers, because that's another emerging space which the data is getting digitized a lot there. So all these can be, then made plug and play functions for the, I would say, ultimate lender. A base platform is already what we have, made live in the market, and now we are building further extensions on top of that. I am sure that would be able to serve a lot of, customer base. But having said that, this is all which is being done from the lender side. On the contrary, it's very important for the customers also to understand that to achieve, this growth rate, it's the time to create do-it-yourself journeys for the customer. Instead of being kind of, I would say, proactive in your approach, it is very very much now. So that is where nowadays we have also started, having discussions with all the different banks, NBFCs, is that to look at the existing set of data which is there. We talk about new customers coming to you, but what about the existing set of customers? A very interesting use case which we were able to solve through a digital lending software was, for example, take an example of auto renewal for MSME customers with a limit of less than 10 lakh rupees. So that's currently the same type of process is being followed to renew these customers as the process is followed to give a new limit to a customer. So whereas we have changed this approach to more of a cash flow based lending now, you understand the cash flow of the customer and basis that you are able to take a call. So at least that delay in the renewal, that I would say disbelief in the customer is something which you can definitely waive off, and then you can have a lot of profiling done for your market and the existing customer base which is already there with you, and that gives you a more of a proactive shape. Then the customers can come on those platforms and take what is readily available for them. So instead of customer coming onto your platform and deciding what he requires, it's time that your platform tells the customer this is what something which is suitable to you. You might use it in the future, or this is an extended line of credit made available for you. So we are doing a lot of effort now that we have settled our basic space in this fintech analysis APIs. We are now trying to make these platforms on top of this. And another, I would say, aspect which will take this entire lending shape to a digital marketplace is the new changes which have been done in the co-lending policies by the RBI. Now, co-lending, I assume that is very, very, I would say, a broad subject. There are still a lot of ambiguities with respect to how the ultimate business would run. But we are also trying to give, a technological shape to this entire co-lending process, so that it can be taken up by the, I would say, banks who are having that capital and NBFCs who are having that foot on the ground. It's a good collaboration which can then enable, this kind of a growth in terms of the digital lending scale.
So great to hear. The capabilities that you're offering to various institutions, and that kind of brings me to the next question. Um, what are what is the view of fintechs being able to collaborate and setting up a sustainable platform for various types of customers and products and loans? I think collaboration obviously comes is a double-edged sword. Some people may think it's also poaching on customers. Some people think it's sharing of data, so at least you're able to score customers better. Rohit, just give me your thoughts on should fintechs and people market players collaborate and do this kind of data sharing and create a sustainable platform, or do you think the way everybody is working now is a more sustainable approach?
No, no. So I absolutely believe that collaboration will be the way forward. I think, and that's a model that I think you can see in general historically in India as well as I think globally, right? Maybe the fintech 2.0, you can say, the era that we have seen in the USA about 10 years back. I think a lot of people were trying to unbundle the financial services and thought that, we'll see more and more specialization and fintechs will take over banks or banks will take over fintechs. And that was the constant debate. And ultimately, what we have seen, the models are maturing to a place where I think ultimately coexisting is the thing that's working out. In India also, I think given fintech markets are anyway, I think, pretty huge. The problems are very complicated. There are multiple layers to it. So, if I talk of a lending business, right, you have multiple aspects that you need to take care of when you're trying to create one. One is obviously capital, which is something where fintechs most likely you can assume will always be at a relative disadvantage versus the large institutions. And then large institutions, while I think a lot of those guys are trying to get digitized and will definitely, I think, improve over the years, uh, uh, the DNA is something which I think will be obviously much more harder to replicate as it is. And maybe I think that's not needed either, right? So the two can actually collaborate pretty well and leverage, I think, complementary strengths on that end. And that's the same thing which will also happen, I think, among fintechs as well. So, for instance, on the data layer, right, there are some guys who are working on specialized layers of data creation. Like as you said, I think a lot of data is coming up, and there will be companies who will try to, I think, create more usable formats, much more standardized versions of those sources, right, which maybe others can just build on top of. So naturally, I think we'll see multiple collaborations across the value chain between, I think, fintechs and banks and fintechs alike. So I think we are quite bullish, and I think the good thing that has happened, at least with COVID, is uh, like the large institutions are also realizing that I think much more faster. Earlier, there was always this inertia when you talk to them. Okay, no, but I think this is how we do the KYC. This is our processes. Compliance will not agree and all. But now I think people have realized that a lot of that is just bureaucratic hassle, right? You can try to get rid of it and can create something which works for the customer. So I think that's definitely changing.
So interesting. Drop in your thoughts whether it's going to be collaboration or consolidation. Is it going to be people who specialize in doing what they're doing best, or is it going to be one player or a few players getting access to the entire market?
Yeah, no, I absolutely. I mean, plus one to what you said, because without collaboration, I don't think this whole credit problem can be solved. If you look at payments, how it was solved over years was largely fragmented till the collaboration came in, and all the industry bodies, all the companies came together and formed the protocol, right? So imagine doing net banking transactions without UPI. Before the UPI came, every bank, every fintech was struggling to support net banking as a transaction because everyone had a different protocol. It's only after the everyone collaborated, including NPCI, and then UPI standardized the protocol and the data exchange, is when really the it made it very easy for all the fintechs and e-commerce apps, etc., to start building payments app, right? So Google Pay, whether it's Phone Pay, Amazon Pay, all of these are nowadays built on kind of UPI as a backbone. And I think I see similar trend happening in lending world, because in lending all the same issue happens. It's all fragmented. There are no standard protocols of exchanging the data. Every bank has a legacy stack. Every bank has their own processes. And in that world, if you try to integrate with banks, it's a painful task of integrating with individual banks and getting data. So the initiatives around, the account aggregator, initiatives around Open, Open Credit Enablement Network, are very important. And only way we all will be successful in unlocking credit is by all banks, fintechs, NPCI kind of body participating together and standardize this protocol and have open banking APIs. And I think we're seeing some early success in this area. Like, we've just started seeing some of the use cases getting onboarded onto account aggregator and Open. And for us, I think for asset-backed lending, it's more difficult because there's a physical asset involved. But there also, we're working with banks on driving standardization. Co-lending is a going to be a big kind of game changer, I feel, because what co-lending does is it simplifies a lot of things you can do for customers without having to rely and have synchronous integration with banks. So
Correct.
that whole collaboration, I think, is happening, and I think it's key
Yeah, I
for
think
credit.
co-lending is also in a way, a means to collaborate. So, right there. Karan, your thoughts? Is this collaboration going to be, difficult? Do you see, banks poaching customers, or do you think, this is the way forward and we'll be able to achieve that?
No, no, collaboration is absolutely necessary. I mean, in some ways, we already collaborate by using civil bureaus or bureaus, right? In general, where
Correct.
we are all putting data back into a common pool that others can use. In fact, just one of the examples is I think the bureaus have been coming back hard on the fintechs to say that move from a monthly reporting to move to a weekly reporting, so that
Correct.
others are able to pick up the data much faster. But we do collaborate. I don't think a healthy credit ecosystem is at all possible without without collaboration, because when there is no collaboration, I think the only people who are the ones to gain are the ones who have nefarious intentions. The good customers pay a price if there's no collaboration. The fintechs pay a price if there's no collaboration. So ultimately, for the benefit of the good customers and for the benefit of fintechs and banks, collaboration is necessary. And just one example is Case is a member of this organization called FACE, which is a fintech lending organization, collaboration across a lot of lending players. We actually all got together, worked out with experience, and we've created a fraud database, a common fraud database across all the digital lending players in India. And again, we pulled in experience just because there's a common trustworthy platform instead of relying on each other, where all of us are pooling our fraud data for access to all the other digital lenders, and it has been a super success for us. Fraud is always very difficult to detect. When fraud hits, you see that the same fraudulent customer is attacking every single player at the same time because they want to maximize their throughput. And this fraud collaboration that we've done through Experian as a part of Face has been super successful, and I believe that may be the future.
Very
While
true.
we were talking about cutting edge technologies, this is one place where blockchain will bring a big disruption. It will take time for the right adoption, but I truly believe for a lot of hype around crypto, the underlying the ledger technology, if there was ever a good use case made for that, it's to keep a
Absolutely
track
true.
of customers lending records in real time across everyone in a very trustworthy manner, in a decentralized manner, so that no one person can massively impact, and it's also still completely visible to the customer, so the good customers can always have a visibility on how their credit performance looking like. But I believe in some form or the other, either a centralized fashion or a decentralized fashion using blockchain, we will have to build a collaborative credit ecosystem.
No, well said, Karan. And I think that brings me to my next thought. What are the various upcoming technologies and upcoming, things that you would want to do in the fintech lending space, and how each one of us is planning to tap into it. Shashank, over to you. What are the next futuristic things coming up in fintech? What are your eyes at, and what are you planning to incorporate in time to come?
So I think one space where we have been very actively working is definitely on the account aggregation space. We are trying to build our aggregations with all the account aggregators here, and that's a good way of reaching out to the customers. And this awareness has to spread as a whole. If we have to make this ecosystem a success, so we are trying to promote this through as many as institutions as possible. That's one. And having I would say a more collaborative approach is what we believe would be the way forward for us. And we have been building a lot of as I mentioned, solutions on the existing customer base and solutions on the new to bank customer base as well. And in addition to this, what we have been categorically focusing in the last 5 to 6 months is where we've been focusing a lot on the small finance banks and the cooperative banks also. That's where I strongly believe that there's a level of digitization which is still required to be infused there. We've onboarded, I would say, close to 5 to 6 different cooperative banks. Now we are planning to change, the digital journey, and the entire approach is kind of becoming digital there. So I am pretty sure that this cooperative bank journey will be proving a very good, I would say, a move in this direction. And I always believe that if a regulation has to come around the cooperative banks, there's a huge set of customers which can be again taken up to that level of digital ecosystem. And then coming back to the fintechs and collaborating with a lot of online lending platforms is what we have been currently focusing on as well, so that we are also able to serve the unserved market and create these alternate data scoring algorithms for whosoever wants to quick start the process of lending there. So I think more to do from customer awareness, and then collaborations with the banks and BFCs for structured lending. And then I would say taking on new initiatives like the account aggregation, or extending our arms to the cooperative banks to make them do digital lending, is something which we'll be taking up in the near future.
Great, great to hear that. Rohit, your thoughts on futuristic landscape in the fintech space? What is it that you think is coming next, or what are you guys planning to do in the future?
Right. So, I mean, see, our intent is to continuously, serve our customers better, and I mean that comes both from a combination of, continuously improving your models, and I mean using, I think technology over there to improve the efficacy. At the same time, I think with account aggregator, and with a lot of new data sources coming up, how do you integrate that, and how do you make sense of that? That's going to be important. So that's going to be largely our focus. At the same time, we are now also launching, I think, more vernacular flows and simpler flows to reduce, I think, even the onboarding period. Like, it's already in minute, but you want to just create the best experience for our customers. So I think these are the things that we have been majorly focusing on. But it's more about, I think, bringing more efficiency so that I think we can scale without a problem.
So, I've also been looking at appless banking these days, WhatsApp user flows where, customer is able to speak and get things done. What sort of current is anything of that sort being implemented by you guys, or do you have anything else in mind to, tackle future landscape?
No, I believe so. I think it is something that I've been excited at a personal level. But I mean, I'll be very honest. I would put the jury's out on that one, whether it will be truly successful or not. But something like getting a loan from WhatsApp chatbots itself, or just very seamless web-based workflows. We've seen a lot of power that apps bring to the table. Chatbots do fulfill our big need, which is customer support and communication with the customer. I think there are companies, MoneyTap attempted to do a workflow, which is a lending workflow, which is a very chat interface. But there are still challenges. I think there will be, you need some maturity with the customer as well, some maturity with the technology as well. But I believe the chat bots, the AI bots that you're talking about, they might have some real use cases. I am still not fully convinced whether end-to-end loan dispersal is one of them. But I mean, I would want to be pleasantly surprised by someone challenging that notion.
Super, good to hear. Japan, your thoughts on innovations coming ahead in the fintech landscape?
Yeah, I mean, there's a lot of innovation going on. We spoke about, which is powered by data. I think one of the areas that I feel there's going to be a big disruption is monetizing physical assets, which I spoke about it earlier. I think the the collateral, people have so much collateral physical assets, and Western markets, if you look at, they never prioritized it because data was always available. So the credit, looking at collateral, and give the credit against collateral was never a priority, which I think is a one big trend I see. The second is, I think, building different financial products. Traditionally, the lending, if you look at it, has generally been like there's a concept of loan, and there's a loan that you pay at the end of the tenure. And but when you see customers, there are a range of customers as we are reaching out to different segments. Some customers are okay paying high interest rates. Some customers are okay taking a lower loan to value ratio. Some customers want flexibility in payments. If you see, the banks have not been able to sort of provide the breadth of such combinations. Every bank will have a portfolio of products. With co-lending kind of model, and with fintechs coming into play, I think fintechs can really sort of work back for some consumers and see what kind of combination they need, what kind of products they need, and innovate on the financial products. So, I mean, buy now, pay later is a great example of innovation that has been out there. But overdraft, how do you productize the overdraft as a product for farmers who have a fluctuating cash flow, who don't want to take a loan today, but want a credit line, want overdraft line, and they can just withdraw from the line when they want, when they want to put inventory. So all of that product innovations I feel can be done. Technology is underlying technology is there. I mean, there's a lot of innovation has already happened. Is kind of my take.
No, so dropping great thoughts there. Overdraft and credit line is something that we at Patak Pay are also working on. Last uh, wide range between fields of the and there was some hope.
Abhishek, I think we're losing you again here.
Uh, Sorry, is this better? Hello, hello, am I back?
Yes.
Hello. Yeah. So
Yes.
I was just saying, 2020 and 2021 have been, 2 wild years. There have been multiple ups and downs. There have been periods where there has been no business at all, and there have been periods of optimism, and then, going back to lockdowns, etc. 2022, Japan, how do you see your company doing? How do you see business picking up with Omicron around? But a lot of digital push already being done. Your thoughts and your closing thoughts on this session, and then I'll move to the rest of the team.
Yeah, no, I think 2022 for me is a continue to building what we did in 2021. I think pandemic has come in and fundamentally changed people's expectations. What earlier was thought of as a want has now become a need. Now everyone wants convenience. Everyone wants, instant credit. No one wants to deal with paper. No one wants to walk into the bank branches. So for us, I think the way I see it is, it's just building on the trend and trying to like really accelerate the innovation further. So whether COVID or not COVID, I think fundamentally that shift has happened in consumers' mind is what I feel, and I see just the acceleration of digital lending. So the way the digital payments got accelerated after demonetization, I feel the lending will get accelerated. Digital lending will get accelerated post this pandemic.
Karan, your thoughts? 2022, how do you look at it?
Oh, oh, absolutely echoing exactly what Japan said. I think this 2022 is going to be a culmination of literally a lot of innovation that has happened in the last 4 5 years. Digitization of the population, access to cheap internet, standardized identity, getting used to smartphones, getting used to apps, having a digital footprint. UPI credit, I believe, is going to be a big trend for 2022. There's already a lot of headwinds in that direction. And I believe that there are two innovations in the pipeline for UPI. One is UPI recurring, becoming more mainstream, and UPI credit getting blessing from NPCI and RBI. When both of those two combine, I think we will literally see the same changes to happen to lending, digital lending, as we've seen to happen to payments because of UPI. And honest to goodness, from the day we started, this is the world we were working towards, where credit can become so seamless, so frictionless, and become so standardized that you don't need to have a different experience for every customer. Customers understand. Right now, customer, whether he's using Google Pay or Phone Pay, understand how UPI works, how payment works. And I believe that some of the standardization in the lending space will make lending a lot more accessible. It will make it a lot more bite-sized, which will make much easier for people to get access to credit for even smaller needs. And I think you'll see a massive shift in lending because of that. And we could not have been more excited for 2022.
No, super. Well said. Shashank, your thoughts on 22? And I think also there's a question from the audience. How will it be helpful for MSME? Will it, create paperless lending or make it more efficient?
I think that's a pretty valid question. So that's the entire, focus of ours in 2022, because what I have seen is that the retail lending scope is still digitized to an extent, and the customers have started accepting this. MSMEs are still, a little skeptic with respect to approaching this digital lending segment or not. So our focus has been, to harness more on the technology in this direction itself, and to make good digital journeys for different stakeholders who are willing to extend a line of credit to these MSMEs. So our focus will be to act as a constant bridge between the borrower and the lender, and to facilitate these solutions from a technology scope, and plus the inclusion of different analysis layers which we can build upon with the new age of data getting available to the market. So for example, like Karan mentioned, that UPI is again bound to pick up in a good way. So if that gets regulated and we have, I would say, an availability of data in that space, definitely we'll be very happy to explore scoring solutions on top of that as well. But apart from this, I think digitization of credit to MSMEs, if that can be empowered by everybody in the country, and we can have a change of focus towards more of a cash flow based lending than of a orthodox manners of lending, that can be a big boost, to the economy as a whole.
Great thoughts. Rohit, what is your outlook for 2022? Your strategy for this year, and closing session, closing thoughts on the session.
Uh, right, Abhishek. So, I totally agree. So, I think from the customer side, I think as everyone has already said, the customer will continue to get more demanding. They are obviously, I think, especially coming out of COVID, anyway, we were going in that direction. That has just accelerated far more, right? So, people will value, I think, complete digital and automated experiences more and more. And I believe over time, anyway, I think that will become sort of a necessity for any startup to provide rather than, sort of a differentiator. So we are definitely, I think, heading in that direction. So people as instant, convenient, pretty much all of those things. Another thing which was always the bottleneck, I feel, demand side has anyway not been the bottleneck in India for growth of this market, because everyone knows anyway this market was getting served by informal sectors in some shape and format anyway. The biggest problem was on the supply side. And then one of the things that we have seen, I think, because most of the startups started in the last 5 6 years, everyone faced that same problem when we were looking to open the supply tap in association with large banks and NBFCs. No one trusted that systems that you are building will be scalable enough or will be able to withstand down cycles. Because I mean that was a standard line. Okay, you haven't seen a down market, you don't know how will you do there and all of that. So now with, I think, the at least the benefit of COVID behind us, I think that was sort of a litmus test for a lot of companies, and companies who have been able to differentiate and showcase, the value that they are bringing, and and how real and I think scalable these models are. They will win confidence of the lenders in getting more adequate supply. And once I think you marry those two, you can look at a much bigger market. And obviously, I think with the product rails in terms of UPI and all, this will only make sure that we can reach out to more folks. So I think overall, I'm quite bullish with respect to Omicron. I think the early signs are looking all right. So hopefully, I think that continues that way. But in any case, I think what we have seen, even with respect to COVID one versus two, the growth impact has been very, very minimal. So I think things will continue to grow. I think all the signs are looking pretty good, and yeah, so I think we will continue to, I think, serve our customers in the best possible manner accordingly.
Great. So there's one final question I read from the audience, which is regard to big data, APIs, and AI, and how with them with regard to digital lending. And I'll take it. So I think definitely the role of big data, AI is going to stay. I mean, it's going to become more and more pervasive. In fact, a lot of it's not going to be just fintechs. It's also going to be at some point banks, neobanks, other institutions also adopting these methodologies. And obviously, fintech will play a large part in that adoption. APIs, as we had discussed earlier, for a collaborative approach, and for fintechs and the entire digital lending ecosystem to work together, API is kind of the key in terms of sharing and the collaborative approach. So I think these things are going to stay. Having said that, I think it was a fantastic panel. I had great insights, very interesting thoughts, on how we see the future coming up, shaping in terms of fintech. How people have various strategies to tackle the credit invisibles, the various kind of data inputs. Not just the financial data or the CIBIL, but alternative data sources that each one of us is using to score these customers. And what is the futuristic outlook of where we are moving, Apples, WhatsApp, so on and so forth. I think it was a fantastic panel. I'm really thankful for everyone to join hands and put this session together. So thanks everyone, and I think if there is any further questions, we're happy to take that.
Well, thank you, everyone. A big round of applause to all the speakers for such an engaging discussion, especially on importance of developing a unique fintech lending ecosystem and how cutting-edge technologies such as big data, APIs, AI are helping in the current scenario. And also, what are the opportunities in the digital lending space in 2022 and beyond, etc. So I would like to thank each panelist again for such an interesting session. And as a token of appreciation, I would like to ask each panelist to stay back to accept the award of participation from Elets. So let's have the award on the screen. Thank you, Mr. Abhishek Gandhi, co-founder Fatak Pay.
Thank you. Thank you.
Thank you, Mr. Rohit Gar, co-founder and chief executive officer of SmartCoin.
Thank you.
Thank you, Mr. Karan Mehta, chief technology officer and co-founder from Kisht.
Thank you. Thanks, everyone.
Thank you, Mr. Japan Doshi, head of product engineering and data science, Rupi.
Thank you for having me.
Thank you, Mr. Shashank Sharma, director, ScoreMe Solution, for supporting
Thanks,
us.
Nishant.
Thank you.
Thanks, everyone.
Thank you, everyone, for the amazing discussion.
All right,
Thanks,
Abhishek.
everyone.
Thank you.
Nice talking to all
Thanks.
of you.
Bye. Same here. Thanks. Bye.
Now we have a networking lunch break. I request all of you to visit our booth and drop in your queries there. And let's all get back by 3 p.m. For an interesting panel discussion on how is the fintech ecosystem transforming the BFSI landscape. So see you at 3 p.m. Thank you so much.